Hello traders and welcome. I'm Francesco from FreeFX. Thanks very much for watching my videos and for following me on here and also on YouTube if you are. Really appreciate it. So essentially today I've been off for a few days because I've been actually preparing for my CMT level 1 exam. I'm doing all this kind of stuff, you know. It's pretty full on, and I was meant to have the exam on the 3rd. There's been a few problems with the exam software, so we've kind of had our exams postponed. So I'm just kind of in between, sort of waiting for my next date. So I'm not being able to progress other things while this is kind of hanging over my head. So I'm sorry if I've not been on for a while. I really wanted to do a video, and because, you know, obviously it's really good to do regular videos and waiting long periods without one. So my trading has actually been quite strange because I've, as you know, I've had a bit of a sort of tumultuous November, shall we say, quite strange, with kind of really zigzagging and try to sort of outsmart myself by really looking for extreme opportunities. I got really hit badly with sort of bad choppiness and taking position sizes that were maybe too big for what the market was telling me in currencies. And also I had a really strange trade with S&P 500. Anyway, long story short, I'm basically trying to do two trades at the moment. First one is USDMXN, the other one is Euro USD. But I really want to update you on the USDMXN. It's a really interesting pair, great potential, and I'm kind of contrarian at the moment. So obviously there's a difficult thing to do because you had to accept a bit of drawdown. And of course, there's no guarantee it's going to come back up and go sort of to my target. So my target is quite wide, so that's why I'm accepting a larger drawdown, because I kind of see this as a slightly longer term trade. Although obviously when you go into longer term trade, you always hope it is less long term than it might be. So it's going to be a bit of a game of patience. I will have to be prepared to take a loss if at this point it just continues to go down, because I can't sort of take this as a continuing loss. And that's going to hurt, obviously, because my intention was to actually have this correcting a bit sooner than what it's doing. So anyway, you see, what I thought we'd do is start with a kind of naked chart, and we'll kind of take it from there and do a few bits of analysis there. So the first thing I'm going to do is take that whole chart, as you can see, nothing written on it whatsoever, and actually work on it live. So the first thing I'm going to do is kind of to help you understand how I'm thinking about this. If you haven't watched my previous video, here's something to kind of focus USDMXN. So first of all, it's an emerging currency. So emerging markets have currency pairs typically that offer higher rollover if you're obviously in this case selling, because the Mexican central bank has a higher interest rate than the US central bank, Federal Reserve. So obviously if you sell into this pair, your broker will give you overnight swap rates that are favorable. I'm actually buying, so I'm actually losing money every day because of the privilege of holding contrary to where the interest rate is more favorable. So you always have to think that your reward has to outshine the negative rollover or carry, if you like. So for that reason, obviously the other thing is like other things. You think of junk bonds, you know, the rewards are greater because there's greater risk and greater volatility. So if you don't like high volatility, avoid obviously things like the one I talk about, the Turkish lira, Mexican peso, Brazilian real, etc. Because they are obviously more volatile currency pairs, you can get quite a lot of action in your favor or against you, obviously. So, but obviously it's still, you know, it's still regulated by two central banks for the respective countries. So it's safe in the sense that there's liquidity there, you know, the two large countries, and there's plenty of liquidity to cover your exposure if you don't pick like really extreme times in the day. So given all that, this currency pair, let's work on it, see how kind of this fits into the scheme of things. First thing I'm going to do is let's put a line through this. I'm going to create a parallel channel, and parallel channel is going to be basically this. You can see I'm just using candlesticks because you can do the closers and keep the the wicks basically out with the actual channel. Now on the bottom side, there's quite an interesting thing going on there. I would basically use that because that's kind of like where all the, but really you should sort of go for this because that's kind of closer to where the action is for the most part. You might actually want to do something a bit different than that. So what you could do is create an external channel and then have an internal channel as well, which would basically be something like this, just a different color perhaps, and we'll do a different color for that. And this will be closer to the other sections, so it will be, actually I've kind of chosen the wrong one, haven't I? Let me see if I can do, that's fine. And then that, yeah, and just kind of modify that. So we'll give that a different color. We'll go for a color that makes it stand out from the previous, and then take that channel be a green. That's fine. The middle line will make it green as well, or blue or something like that. All right, so that hopefully, let's see if I've done it right. All right, okay, so the two middle lines, that's sort of the mean reversion lines there from the outer channel and the middle channel should really be the same. They're slightly different, which tells me that I've not quite done it parallel to the external channel perfectly. But essentially what you can see is that the external channel is based on this peak of 2009 and the more recent one in 2020. And the troughs are basically the one in 2013 and 14. And the kind of more internal parallel channels got these kind of, it's kind of more centered around these highs there and the closes here. And the bottom bit is the troughs of 2011 that became kind of resistance in 2013. And then the trough here in January 2020. So that kind of gives you an all-encompassing kind of setup, and then you can see where we are in relation to that. So for example, the current price, as you can see, is approaching the internal channel bottom trend line, and because that's kind of been validated once before and then further down the line 3-4 times, basically it's quite an important one. The bottom one is like a filter, if you like, but remember this is a monthly chart, so we're looking at giving away about here, so like 2 years almost of your life. I'm not intending to wait that long. So if it fails at this kind of end, I know it's a goner, right? It's just not gonna wash it. So probably I should kind of save this chart for later, but because I'm not a paying member of TradingView, it's unlikely that I'll be able to access this chart. So I have to remember what I promised, which is if it fails this particular level. But I know roughly that it's not working from lots of things, not just that. Basically, that's one thing that I'm looking at, is that price is approaching this level and it's likely that it will reverse. The other things I'm looking at are US oil. So here's a chart of US oil, because we know that Mexico is, the Mexican peso is sensitive to changes in the US oil, WTI. So if we look at the charts for the two, obviously because the Mexican currency is the quote currency, it's inverted. And that you can see that where it's dropping here, this heavy drop, you've got the oil picking up. Obviously that pickup is kind of rounding off around here, and that kind of tells me that it's oil maybe driving price here, and oil is struggling, and it's picked up from these lows, but it's not really actually doing a lot. Now, you remember the crash of 2015 in oil and how it just plummeted? We had a more recent crash before the COVID crisis, okay, and then basically that was the COVID pandemic kind of drop. So this drop here, if we measure that using shift and click, giving us this Is it working? Where's that? All right, let's try this again. All right, so if you measure that drop there, you can see it is, yeah, it's kind of, it lasted about, what is it, 8 months or something like that, 7 months to be fair, and it was about minus 54%. And then if you measure this one, it was about 71%, 69%. So and it was about four months. So I guess it's an even more violent one, and well, this one to me looks like it's a sharper drop, but I think it could be that this is a logarithmic chart or something. I'm not sure. But anyway, it's something as big as this drop, basically, if not more. And so we have to think about how well did oil recover from the 2015 crash, 2014-15 crash. Well, not very well, because it sort of continued lower in later 15, and then it took to recover to about, from the trough here, to about 50% of that move. It got to the middle of 2018, and then it dropped further. So that's a big move, and it's only got back to kind of like the trough of 2015 there, early 2015. So we're kind of like at this crucial point in oil. Mexican Peso up there is USDMXN is obviously at a crucial point as well. So which one is going to drive the other? That's what we always like to think about, to a sort of kind of like a chicken and egg situation, and try and see which asset is driving the other. And then the other thing I was going to look at is crude oil. This is the chart from CME. So you can see that if we stretch back, we've got a number of things going on in this chart. So I looked at the March contracts for WTI crude oil futures on CME, and I thought we're looking at quite a lot of price action recently. If you look at the daily chart, where the candles are looking quite small up here. I haven't got to measure this. So what I thought is, because I don't really follow oil, so I know, for example, that in Euro USD, at the height of the pandemic, etc., it was kind of the ATR was measuring up to like 150 pips on the daily, what have you. But then something like that anyway. So I have a rough idea of what the average volatility, if you like, based on range might be. But when it comes to something that I don't follow, I don't have it on top of my head, and I don't know what the candles, if I did this and somebody presented me that, I'd go, oh wow, it's very volatile, and then start looking at the numbers. But really, because I don't know that, to me that looks like it's really small progress. If you look at prices here, it's from $44 to $45. Let's just calculate it. It's basically tiny. So then really the only way to find out is to take something like the average true range, which is an average obviously, but and look at the daily there and see that in the last couple of months we've had a pickup in volatility, obviously during the pandemic, with a big drop there. We got from like 0.50, like 50 cents, to like $250, and then it dropped all the way back down in September to just kind of like under $1, and then picked up to about $1.80, and now it's sitting at $1.38. All right, so basically the volatility, or the range, I should say, is dropping on an intraday basis, and it has been rising, obviously, but as prices picked up, it's been dropping. So the rate of change is being hindered by the size of that change. The other thing is, so that's one thing, and the other thing, again, going back to oil, kind of rounding off that recovery from the lows of the 2015 crash and then 2019 drop. Is that the volume in futures, as you can see, we've had a bit of buying here, but it hasn't really done much. It's gone from 42 something to 45, so about $3, and then it's sort of loitered there. So we're kind of stuck in this sort of range, and I think that tells us that we are a bit lost in terms of what this is doing. So if we just kind of put a rectangle here, this range is kind of like that. It's from 44.50 to 45.80, something like that. So it's like $1.30. So we're kind of stuck in this rectangle, or in Japanese terms, a box. And that's congestion, and that's going to break at some point. You can see the candles here, like today, is like a perfect doji there on the right hand side here, and the day before as well, we've got two dojis basically side by side. So price is kind of stuck there, and there's not really much progress. And we've had a sort of a doji there as well a few days ago. So volume is kind of interesting because we had this rise in buying volume. Then it's sort of, we got into this congestion. It's kind of chopped around between selling and buying, and now it's like 1 day sell, 1 day buy, 1 day buy and 1 day sell, and the volume is dropping. So I guess what I'm trying to say is it's not really making a lot of progress. But interesting, what I really find even more telling is if you go to the hourly, because that's where you really see the kind of daily action one day after the other. The intraday is much more powerful as a tool. You can see that we've got these different peaks there. I'm just going to take that down a bit like that so we can see better. Now, if you look from the 2nd of December, so it's been just about a week, you can see the sharp buy and then the sharp sell within the same day, kind of Chicago time morning followed by afternoon session. So that basically meant that we started the day and finished around the same kind of price. Then we had a sharp sell here on the 3rd of December, and that took us a little bit higher, and then we're going to kind of met resistance there. Then a day of kind of lower volume, another lower volume, another kind of relatively low volume. This kind of volume size sell bar is the same as a week ago. Now that time it took it down from 45.80 something to 45.20, so about 60 cents. This time it took it from 46.40 to 45.60. So again, 80 cents. So but that sort of happened within one candle, which is pretty impressive. Then it sort of bounced back, and then it came back down. But essentially, we are stuck in a range, as you can see. We've been stuck for a few days now. It's quite a well-defined range, so we're kind of waiting for some kind of outbreak, or breakout, I should say. Not outbreak, that's COVID. But the breakout should be out of this box. And obviously, then you can go into fundamentals. I mean, so many things driving oil. There's the supply, OPEC. There's, if you think of oil, think of other seasonal patterns. Commodities have sometimes better defined seasonal patterns than obviously currencies, although I haven't done a study of that, but from reading, etc. So again, there's a lot of things you can do. But going back to the Mexican side, the Mexican peso, let's have a look at this, because this is a really interesting chart. It's the iShares MSCI Mexico. We've got a lot of stuff going on here. This is really good because, again, it's a source of volume and sentiment. So if we look at this from the perspective of the Mexican peso, and we take the daily view there, so that's where we are. If you look back a few months, you can see from the, let's have a look back in the pandemic. So that's where we had the steep rise in USDMXN, because the Mexican peso was the one to drop.